Large Bitcoin purchases and huge future liquidations have influenced the market's latest movements, with some even talking about a global financial and economic hurricane. Before we dive into the fundamental and on-chain analysis, let's kick off with Bitcoin's technical analysis. In Bitcoin's weekly timeframe, a movement of candlesticks that hadn't been seen up until now took place. We're talking about 9 consecutive candlesticks. After these 9 candlesticks, we're starting to see a week with a green candlestick that isn't full-bodied. With the last 3 candlesticks, we saw how the price was already marking these shadows, which was a sign of buying interest in that area. These candlesticks could be a type of hammer candlestick, and this week's candlestick seems to want to draw an inverted hammer candlestick, which in the lower zone tends to be a sign of a movement reversal. But at the moment, it is simply slowing down the fall, where we can see bulls starting to defend the important zone. In the daily time frame, as we've mentioned in our previous analysis, the falling wedge pattern has been fulfilled. A pattern that was leaning on a divergence between the price and the RSI between May 9th and May 27th. On May 24th, 25th and 26th, we saw this evening star pattern, which wasn't too clear. But if we take in mind the bodies without looking at the spikes, it has the same connotation: green candlestick, shooting star candlestick, and a candlestick with a body that surpasses half of the previous green candlestick. This was a continuation sign of the next candlestick on May 27th. This lower part, as mentioned in our previous analysis, is an important liquidity zone towards which the price was heading between $28,000 and $28,600. The price went on to look for the orders that we saw on the heat maps. On May 30th, a full-bodied green candlestick formed with an input volume and was precisely looking to reach the important resistance in the $31,000 to $33,000 zone. In fact, if we foresee the technical target of this pattern, it has been met. Then we saw that classic doji candlestick and a bearish continuation movement with a red full-bodied candlestick with a pretty bearish candlestick and a similar volume input. With the deployed moving averages, we can see that the price was about to surpass the higher part of the falling wedge, and how the volume input was produced exactly in the higher part of this channel, which converged with the 20-period moving average. And the price headed towards the next important resistance at $32,000. Once again, when the setback occurred following the neutral indecision doji candlestick, a full-bodied candlestick was produced, which halted at the 20-period moving average, which, as we can see, has served as support over the last 2 days. In addition, it is a pullback that tests that higher part of the rising wedge that formed. Right now, the 20-period moving average served as a support zone where we saw a pullback movement, and now there's a new zone to beat the $32,000 zone, where we once again see harmony between effort and outcome, meaning between price and volume. We see the zone of $33,000 to $34,000, an important zone where the 50-period moving average is found. On the other hand, if the price is unable to reach the resistance at $32,000 and we see a candlestick rejection, losing the $29,500 zone approximately, the support tested would be the one at $28,400 approximately, which is where a type of parallel channel, or at least a price compression structure, is starting to form. Although we could be in the face of a distribution pattern and not an accumulation one, although it's still too soon to know for sure. Distribution is the systematic sale of a large number of cryptocurrencies in a lateral price movement over a period of time, and an accumulation range is a lateral movement of the price preceded by a downward movement on which an absorption maneuver is carried out by the large operators of the aim of accumulating stock. And now let's move on to the SP500 chart, the index that represents the 500 most important companies in the United States, which we'll be analyzing due to its direct correlation with Bitcoin's price movements. If we take a look, the reversal movement here starts before that of Bitcoin. On May 25th, SP500 already reacted positively to certain news stories regarding the macroeconomy, which formed two large candlesticks on May 26th and 27th, two full-bodied bullish candlesticks which reached the resistance zone at 4,100 points and even surpassed that zone, moving on to test the next resistance zone at 4,200 points. Meanwhile, Bitcoin stepped back and separated itself from SP500. We'll be analysing the reasons behind this disassociation shortly, so be sure to stay till the end of the video. The index seems to be in search of a downtrend zone, and on May 30th, that rejection candlestick formed and technically carried out a corrective movement. This led to a pullback from the breaking point, which is the previous resistance and the new support. We saw how on June 2nd, a bullish continuation movement was carried out. Both the previous red candlesticks could be influenced by the alarming inflation data in the Eurozone, which could have affected investors in the United States. In addition, the data around the fall in consumer confidence was published on May 31st, although the outcome is better than expected. On June 2nd, considerable positive data on the number of applications for unemployment benefits was published. And this has been one of the factors that has boosted the SP500 with a bullish engulfing candlestick on June 2nd. If we start seeing candlesticks that surpass the bearish trend line and converge with the resistance zone at 4,200 points, with the price consolidation above, we'd go on to test the 4,300 point zone approximately. On the flip side, if it rejects the trend line movement and the macroeconomic data, it could move towards the 4,100 point zone and mark a lateralization zone, consolidating the current zone to gain strength. But if unemployment in the United States increases and payrolls in the country reduce in regards to expectations, the SP500 index could experience a dangerous corrective movement. Now, let's look at a piece of news that many believe to have impacted Bitcoin's bullish movements over the last few days. The Bank of Panama, called Towerbank, will include cryptocurrencies within its operations and work towards attracting users to create accounts that incorporate assets of this type. For some, this news could have had an impact on the price of Bitcoin, but we must keep in mind that in an environment with so much fear, uncertainty, and doubt, this type of news is unable to impact the price of Bitcoin. It's good news for Bitcoin, but it doesn't hold enough weight to influence the entire market. Now, let's move on to news surrounding the macroeconomic context. The director of JPMorgan, one of the largest banks in the world, warns an economic hurricane is approaching. Let's look over some data to understand the meaning behind his words. The consumer price index in the Eurozone continues to sit at a pretty worrying level, reaching 8.1%. This could lead the Central European Bank to tighten its monetary policy and increase interest rates. Let's not forget that Christine Lagarde, president of the institution, had already announced that there would be a rise in interest rates from June onwards. Now, we're yet to find out to what extent this increase will take place. In the United States, consumer confidence is one of the main indicators to predict consumer expenses, which represents a fundamental part of the economy. The data published recently places it at 106.4 points, which exceeds the prediction, although, as we can see, confidence has been dropping since December. And more in the United States, let's take a look at the application for unemployment benefits, which is a good indicator of the labor market's health. As we can see, applications have increased to 200,000, which surpasses expectations. The unemployment rate in the United States is expected to reach 3.5% this month, which is 0.1% less than the previous month. This is positive employment data, which could even be considered full employment, but we need to pay attention to the imminent data publication for the month of May, which will be examined in our next analysis. On the other hand, the number of non-farm payrolls in the United States is expected to fall. This is extremely important as non-farm payrolls represent 80% of workers that generate the gross domestic product, although we'll have to pay attention to the May's data. And going back to the European Union, the Commission has established a veto on 90% of the oil imported from Russia, although the United Arab Emirates and Saudi Arabia, according to Reuters, would already be ready to increase oil production in the face of this cut in purchases from Russia. We'll continue to follow up on the Central European Bank and the Federal Reserve to see how they react to the new inflation data and whether they're more aggressive in regard to the rise in interest rates and with the sale of the large number of debt securities that it currently owns. The sale of those securities will reduce the liquidity of the entire system, liquidity that is currently excessive, according to Jamie Dimon, CEO of JPMorgan. However, Dimon believes that a situation like the one suffered in 2008 will not repeat itself. To better understand Bitcoin's movements, let's look at the following heat map, which reflects the purchase orders on order books. On May 27th, the price headed towards those red zones on the heat map in order to gain strength, to obtain liquidity and continue its movement towards the upside. But why did this bullish movement take place? As we were saying, the price looked for that liquidity zone on May 27th. Liquidity carried out between $28,000 and $28,600. Upon reaching that area and gaining strength, we have subsequently seen a price breakout, specifically the falling wedge pattern, a break that already warned of the divergence that occurred in the RSI, and certain investors and traders took advantage of this market structure, and then we saw an upward movement. On May 30th, we saw how a significant amount of shorts were liquidated from all exchanges. In addition, they relied on futures traders leveraging longs, leaning on this bullish movement as we can see in the blue delta cumulative volume line, which reveals great buying interest in futures trading. And how can we verify this? The funding rate, which as we can see on May 30th, increases considerably since there are so many traders opening long positions with leverage. In short, the significant purchase of Bitcoins on BITFINEX added to the purchase of Bitcoins by investment funds, plus the cascade of liquidations produced in perpetual futures caused the spike on May 30th. But let's take a look at the reasons behind the subsequent drop on June 1st. In most exchanges, we saw that as the price increased, more Bitcoins were sold in spot, as we can see on this chart's green line. Additionally, we can see that the blue line, which represents the futures volume, experienced a fall, which is a sign of the sale of Bitcoin in futures. Due to the massive positioning of traders in long, the funding rate sat in the over-leveraged zone, which led investors to start shorting futures. As a result, we can see a huge cascade of long liquidations on June 1st, resulting in $336 million of losses for these perpetual futures traders. And to bring our analysis to an end, let's look at the important support located at $28,000. Over the last few days, we've seen a very important cluster of buy positions in the area of $29,200. But watch out, as they're the orders currently placed and they could change as the days go by. Especially if we keep in mind that the cryptocurrency market is in a state of extreme fear. In this chart, we can see that there are always impulsive phases and corrective phases, where we can see that the main trend line is bullish. At this moment, we can see a percentage of UTXO in profit, meaning unspent Bitcoins, which sits at 73%. But what does this mean? In the previous lower points, such as 2011, we can see that just 8% of Bitcoins were in profit. In 2015 correction, we saw that it reached 15%, and in 2019, it sat at 44%, while at the peak of COVID, it sat at 40%. This trend line indicates that cycles are changing and corrections are not as severe anymore. A multitude of factors influence this: inflation, the intervention of institutional players, mass adoption, etc. We'll have to see over the coming days whether the current zone in which Bitcoin's price lies is an accumulation or distribution zone. And we'll also have to pay close attention to the macroeconomic data around unemployment in the United States, which could have an impact on traditional markets.